Hello and welcome to the Trader's Winning Edge software package training video, and this will be the 5th edition on the SQ signal. I am Dave Jackson and we will be delving into this SQ signal in just a moment. And of course the first thing we need to do is to go over the disclaimer statement. First one is risk disclosure. And just some highlights. Past performance does not guarantee future results. Trading involves substantial risk. Only trade money you can afford to lose. No one can guarantee profits or freedom from loss. The next panel is the U.S. government required disclaimer. Trading has large potential rewards and large potential risks. Don't trade money you can't afford to lose, and past performance is not indicative of future results. Now we have up that all-important CFTC Rule 4.41. Simulated results do not represent actual trading. Simulated trading programs have the benefit of hindsight. And the last one. Substantial risk is involved, and you must be willing to accept this risk. Again, don't trade money you can't afford to lose, and no offer is being made in this video to buy or sell futures, options, stocks, or ETFs. And I appreciate your patience as we go through this necessary part. For the squeeze indicator, I have put together just a simple Word document to go through, so that way you'll be able to refer back to this on the video, just to give you some basic information about the concept of this squeeze. So we'll go through this, and after we're done with this, we'll go to a live chart and show you some settings and how to filter this indicator. So we start with the FT Squeeze Trader's Winning Edge indicator, a simple to use indicator for congested, sideways, range-bound price action. Perhaps at some point in our trading careers, we have all had moments when the markets made us feel like this poor fellow, and I'll let that graphic speak for itself. What we will cover here is the challenge of congested, sideways, range-bound price action. One of the most difficult price actions to trade successfully, yet it occurs far more often than trending price action. If price is relatively congested 70% of the time, does it not make sense to be able to trade profitably during that time? If you are a pure trend trader, then identifying congestion early will potentially keep you out of trouble. Why and where large price moves get started? Most indicators are built for trending price action. The FT Squeeze TWE indicator is unique in its focus on congested price action. And I'm going to show you a little trick to even turn this one into a trending indicator. Just a blank chart, really where would you enter, where would you exit? Pretty tough looking range bound area. Do you have a strategy of what to do during this price action in your written trade plan? Perhaps you just want to avoid this type of price action. And have you ever had this thought? Why can't the market just trend up or down? I hate this congestion. So here's our poor fellow, how do I deal with this dag-nab congestion? Little technical stuff here. Please first understand the significance of Bollinger Bands. And before you say, ugh, Bollinger Bands, just please bear with me on this. Bollinger's work on the principle of standard deviation math, best shown by the famous bell curve, which has nothing to do with trading. The dark blue sections is plus or minus one standard deviation from the mean, the center line here. This accounts for 68.2% of the area under the curve when you add up 34.1 and 34.1 again, plus or minus. The dark blue plus the medium blue, from all the way from over here to all the way from over here, would be plus or minus 2 standard deviations from the mean, and that accounts for a little over 95%. And if you want to go way, way out here, that's going to be 99.73. But 2 standard deviations will get you 95% of occurrences. And a little side note I put in here, options traders rely heavily on standard deviation math. Many ignore charts and technical analysis. Using the squeeze indicator on your chart, you are combining 2 powerful techniques to give yourself a greater edge in the market. Standard deviation math plus chart technical analysis. So, moving on. So a Bollinger Band works by measuring standard deviation of price relative to a moving average. And I asked the question, so what? How does this help me trade? If you put a reliable moving average, such as a 50 or a 34, on your chart and a Bollinger Band set to 2 standard deviations around that moving average, you will notice that price stays contained by the Bollinger Bands approximately 95% of the time. This is especially true during congested price action. Moreover, when price touches the Bollinger Band during congestion, it has a high likelihood of reversing direction. Knowing this gives you a statistical edge. Trading is a game of odds and probabilities. This is how we will trade during the squeeze. A Keltner channel is another form of band-style indicator, like Bollinger Bands, based on average true range instead of standard deviation relative to a moving average. We will make use of the different behavior of these 2 indicators to create the squeeze. Special note, the Bollinger moving average most used for stocks is 20. This does not work as well on futures. This is a common mistake traders make when using Bollinger Bands on future charts. Does it make logical sense that many traders put 100% of their efforts into capturing what the market does only 30% of the time? You can each answer that question to your own satisfaction. The FT Squeeze TW indicator is one way to address the challenges of congested price action. The idea is to use this tool to effectively deal with the 70% of the time price action is congested. Put another way, and you see our little horse rider pointing backwards, he's focusing very intently on that 30% trending, whereas the horse is looking at the 70% congested range-bound time. And the caption reads, "It's easier to ride the horse in the direction it's going." The FT Squeeze TWE indicator has 3 main uses. An early heads up that congested price action is forming. Number 2, provide a tool to profitably trade during congestion. Or number 3, provide advance notice of a large price move. An important part of the FT Squeeze indicator is its simplicity. You do not need to spend weeks figuring this out. Everything should be made as simple as possible, but no simpler. Albert Einstein. I just like that quote. What is a squeeze? Price action is in a squeeze when the Bollinger Bands squeeze inside the Keltner channel. That's it. Let's look at some examples. In this case, our upper Bollinger Band is in red, the lower Bollinger Band is in green, and both of the Keltner channels are yellow. Now I've got a vertical line here, and I've got a vertical line here. This vertical line represents when the Bollinger Bands went inside the Keltner channels. So price enters the squeeze. So now price is in this squeeze. And it exited over here. One little thing I said as a hint, when using Bollinger Bands and Keltner channels, because these are just both standard NinjaTrader indicators, just make sure you set the auto scale to false, and that's a pretty darn good piece of advice for any indicator you might use. If you set auto scale to true with Bollinger Bands, you're going to get these times, and it's just an example here is when the Bollinger Band gets way far away from price. Well, if you force it to always show the Bollinger Band in the screen, it's going to skew your price action. So the question here is there a way to make this squeeze easier to see on my chart? The indicator itself colors the chart background during the squeeze. The exact color and the opacity is user selectable. But notice this is exactly the same screenshot. And yes, I'm going to go back for just a second. So there's the first one. Now the second one. All of a sudden we've colored that background a different color. Same screenshot, different background color. I chose one intentionally that's a little, in my opinion, obnoxious, just to let you know you can make it any color you want. So this tells us we are in a squeeze, but how do we use that to trade it? Now we enter the squeeze signal, and it's going to be the SQ. The SQ signal forms only during the squeeze, when the price is near or exceeds the Bollinger Band. It forms only on the reversal bar. It can be set to form at slightly different distances from the Bollinger Band, depending on your preference. So here we are with exactly the same screenshot, and now we've got some SQ signals forming. This is a different screenshot, and this happens to be a crude oil 5-2 chart. Again, makes no difference what market we're looking at or even what size chart. They're all going to have similar behaviors and properties due to that fractal nature of the market. But just to give you an example here, the first signal, which is this one right here, that max excursion went 45 ticks, right up to here. The second signal max excursion went 53 ticks, right down to here. You could argue it actually went down to here, but I just from that point to where that signal is, that was 54 ticks. So this does give a trader an opportunity to profit in a congested market. Now, note this code is written as a 2 in, 1 out. So both Bollinger Bands must get inside the Keltners over here to begin the squeeze. But on the other hand, when the squeeze ends, only one Bollinger Band needs to get outside the Keltners to end the squeeze. What this does, this gives you a little quicker notice of the price breakout, but it also gives you a little more confirmed notice of the squeeze beginning. So it was intentionally done that way. This is the same screenshot with the Keltner multiplier increased. Keltner channels have been removed. One of the things we're going to get into with the live chart is how do we determine when this squeeze occurs? And basically, it's the Keltner multiplier number that we'll use. And in the settings, here it is right here, Keltner channel multiplier. So vary this number to increase or decrease when the squeeze happens. I always use 2 for the Bollinger Band standard deviation because I want that 95% price containment. And that 2 standard deviation gives me that. Whatever MA number you use for the Bollinger Band, use the same one for the Keltner period. The only MA period settings I personally have used are 50 and 34. So we've got Bollinger Band 34, Keltner 34, and there's Bollinger standard deviations. You can pretty much leave the 2 standard deviation one there. You might try a couple different Bollinger Band MA, Keltner MA settings, but you'll definitely be changing this Keltner channel multiplier. We've got a nice little collection of SQ signals. This happens to be a 4-2 Russell chart using the 34 MA setting with a Keltner multiplier at 35. A key principle of the squeeze is timing. Early in the squeeze, you may see band-to-band trades. Later in the squeeze, the price will, and I should underline and highlight will, break out of the squeeze. There may be a late in the squeeze signal that fails due to the price breaking out. So what is actually happening during the squeeze? The quiet price action of the squeeze is when large traders and institutions are building their positions. If they enter their large positions all at once, the market will break out prematurely. As in our example above, each time price went up to the Bollinger Band, the institutions added more contracts at that better price, getting ready to take the market down. This is done by running out the stops of the smaller traders that had already gone short. This is why we'll see so many double, triple, quadruple, etc. tops and bottoms before big runs. This example shows the timing aspect of the squeeze. Two smaller trades followed by a larger trade. I like to have a 200 and a 600 EMA on the chart to help with larger time frame trend direction. In this case, the white line is the 200. Now, I know many traders make their 200 EMA red. I have been using white because I make my Bollinger Band red. But whatever your color preferences are, you can do whatever you want on that. In this example, we have two winning signals and several other losing signals, if you'll notice. This squeeze indicator has two inputs for moving averages to filter the SQ signal. And this next screen, now we just have the two winning signals. Both Bollinger Bands are under the 200 EMA, so only short signals. Can also filter by the slope of the moving average. We now have made this into a trending indicator, and we're going to go over this on a live chart. But that one little filter, in this case, you can see both of the Bollinger Bands went underneath the 200. So that filter says when that happens, we're only going to give you short signals. And in this case, the previous page with the long signals, they didn't do so well. So that's why that filter's in place. Again, any of these trade signals we'll be going over, the BR, the SQ, and the ZR. You know, the secret is in the filtering. Now we got the same filter applied, this 200 EMA filter, but the MA, notice, is between the Bollinger Bands. So now we have signals in both directions. So this filter makes the SQ signal both a range-bound and a trending indicator. And I make a little comment here, what a smart filter rod programmed. So just keep in mind our moving average between the Bollinger Bands will get signals both ways. If that moving average is completely above both of them, only short signals. If that moving average were to be completely below both of them, only long signals. Also, you can filter by the number of ticks between the Bollinger Bands. Sometimes these markets, when they get into a squeeze, get so narrow, there's just nothing there. Just not worth taking the signals. So you can choose through your back testing to say, hey, if it gets below, and my example here is, this shows a 30 tick rectangular box for reference, and then we apply this in this slide, and the signals disappear. Okay, so this is minimum Bollinger width to confirm. In this case, was set to 30. And play around with that number, see what's appropriate. This is what the squeeze settings look like. This is just an expanded version. We will be referring to this during the live chart. But up here at the top is all your settings for the Bollingers and the Keltner. This is going to default on your software to 50 and 50 for the band periods, 3.6 for the Keltner multi, and this is a number you're going to change a lot. I never change it from the two standard deviations. We've got a couple of these moving averages, the 200 and the 600, and we've got the background color of the squeeze. A lot of different things we'll go over, what the opacity is, what the color of it is. And are we going to show the Bollinger Bands? Are we going to show the Bollinger Band, or we're going to color the Bollinger Bands with the slope, all different types of things. We're going to show the Keltners, or we're going to show the moving averages, or we're going to show the squeeze signals. One nice thing with this, it's not an all or nothing. You will notice with the BR signals and the ZR signals, if you choose false, you got nothing. It collapses everything. But on this, it's not true, and this is why this is a little different. Because you may quite frankly say, hey, I don't want to show the squeeze signals. Not interested in those. I don't want to show the Bollinger Bands. All I want to show is the background of when this thing goes into a squeeze, so at least I'll know what's going on. So you can have very much flexibility of how to use this. And then we get into all this, that we're going to confirm signals with the Keltner midline, which by the way is the same as the Bollinger Band midline. We're going to confirm it with the MA above below the Bollingers like we looked at, or the slope. And you got a couple different MA choices. Maximum number of bars from the start of the squeeze. This is going to default to a large number so that you get all the signals you could possibly see. But you may decide that, hey, after this thing has been in a squeeze for 100 bars, I don't want to see these signals because I know it's going to break out. And here's the minimum Bollinger width to confirm. If you put it on 0, it doesn't apply. Our example showed a 30, and that was going to be, hey, if the Bollingers are less than 30, I don't want to see signals. So that's how you'd use that. Moving on. Where do you go from here? Please set the indicator up on your favorite trade chart and just have a look at it. The SQ signals will show up on historical data, so it's easy to load 30 days and just scroll back and forth and have a look. Try some different settings with the Bollinger Bands, a 50 MA and 2 standard deviations, or a 34 MA and 2 standard deviations. Same with the Keltner. Now with the multiplier, remember that multiplier is going to determine how wide that squeeze is. Do use the same MA setting on both. The bigger the Keltner multiplier, the more time you're going to be in the squeeze. A 3.6 setting will be more time in the squeeze than a 2 setting on the Keltner multiplier. So play around with that a little bit. In general, the smaller the band period setting, the more signals, but the more failed signals. So a 50 period is more conservative and a 34 is more aggressive. I like the 200 and the 600 exponential moving averages for trend direction, and these can be also used for filter signals. This 200 and 600, I'm sure you've heard Jerry talk about those many times. Try different numbers as minimum Bollinger Band width. 30 is a good start. You can also choose to stop signals from forming after the X number of bars in the squeeze. A final word with this new indicator is back test before you trade. After you've done your back testing, you might decide to trade the SQ signals. You might decide to just use the background color as a time to not trade if you are a pure trend trader. You might decide to watch for the big move after the price has been in the squeeze for quite a while and is breaking out. Last screen, not having a tool to deal with congestive range-bound price action is like paddling your canoe upstream, fighting the current all the way. The FT Squeeze TWA indicator allows you to turn your canoe around, paddle downstream, and go with the flow. Now we're looking at a live chart, and this is a crude oil 5-2. And really all I want to do here is just kind of review a little bit, what are we looking at. The big heavy white line is the 200 exponential moving average, and this is a Dodger blue dash line, that is a 600, and the cyan line is really the midpoint of both the Bollinger Band and the Keltner. So that's the midpoint. Upper Bollinger in red, the Keltners are in this little dashed yellow, lower Bollinger Band in green, little dash yellow. And we've got our background color. I'm going to slide over just a bit. So the squeeze began. We had this little tiny squeeze over here. So you'll see things like this. But the squeeze began, and you notice we had squeeze signals inside the squeeze. You will not see Even though the price went outside the Bollinger Band here, you will not see a squeeze signal because it wasn't in the squeeze. It's just the definition of the signal. One thing I want to point out is that you can select how far you think price should be from that Bollinger Band. If you think you want to see a signal based on your back testing when it's 5 ticks from the Bollinger Band, it'll print one there. You can select that. If you say, no, I need it to go, several ticks beyond the Bollinger Band before I want to take one, you can do that. So that's just a personal preference, and you notice we've got quite a selection here. This one came close to the Bollinger Band, didn't quite make it. This one exceeded it, just barely exceeded it by a tick, just by a tick. So quite a bit of variation. So that's a pretty darn good filter. So I'm going to slide over here a little bit and made some notes just so they'll be on the video, just to review this filtering the SQ signal. So really the very first filter we're looking at is what are the Bollinger Band and Keltner Band MA selections. And as in the Word document, I've only used 50 and 34 myself, but you can play around with other settings. The Keltner channel multiplier, that is a very important one to play with. This dash yellow line is going to determine the squeeze. The Bollinger Bands came inside of it, we got a squeeze. Well, if you make this number a lot smaller, it's harder for the Bollinger Band to get inside of it. So kind of have to play around with what looks right to you, and just scrolling back and forth on your chart, what looks like range-bound action, where would you like to see, these squeeze signals. The signal offset and ticks we just discussed earlier, you can see that one just went a little bit past. That one went a little bit past. By the way, a setting of 0 on that says right on the band, has to be at least to the Bollinger Band. A little past is okay. So that setting is by definition, a at least setting. Notice these just didn't quite touch the band. They didn't get a signal. That absolutely touched the band and it exceeded it. But notice this green bar also touched the band, but it wasn't a reversal bar. So it has to form on a reversal bar. The next filter is the max bars from start of squeeze. Notice how these two signals worked out pretty good. You had some potential to make some money on those. This one not so much, and that's just the definition. Price goes into a squeeze, it will 100% of the time, no exceptions, it will eventually break out of the squeeze, whether it's going to break up or down. And we had some clues with this 600 moving average kind of angling down, and the 200 moving down, that maybe this thing's going to break down. But here is this late in the squeeze losing signal. So you can do some back testing, and an easy way to do that is just to use the ruler. Say this is the first bar that entered. So we're going to draw a line all the way to this failed signal. And let's see, it was 77 bars. Well, you do that, over 30 days, and you're going to get a number that is kind of a, hey, I've noticed that, for my chart, over X number of bars, they don't work out so good. So that's how you decide on that. The minimum Bollinger width to confirm. I'm going to use my little pre-drawn rectangle over here. This happens to be a 30 tick height. And if you'll notice, this Bollinger Band in here is, right kind of flirting with that 30 tick. So had you said 30 tick minimum, you would have that signal right there. And if you said 30 tick minimum, notice over here, you would not get that signal. Now, in reality, that signal worked out very well. So you have to play around with this. Don't have to use it at all, but it's there as a filter should you decide to use it. Number 6 here is to confirm with the Keltner midline. In this case, it's the cyan, since we're using a 50 period moving average to do this. So I cleverly colored it cyan, which is what Jerry always uses for the 50. And you can actually confirm it with this midline, and I actually need to add a word there. It's the slope of the midline. So in this case, that midline was sloping down. So that signal would have formed. Now in this case, that midline was actually sloping up. It would have disallowed that signal. So just another one to play around with. Now, confirming with this Keltner midline, and then we go to confirm with the MA. This is a little different. This takes a little more explanation, and I wanted to go over this. So I'm actually going to apply this. Right now, this confirm with MA above below Bollinger is not on there. And by the way, you can also confirm with the slope. That's a separate confirmation, but they both have to do with the moving average. I'm just going to demonstrate the above below Bollinger because I think that's a very interesting way to filter these signals. And so right now, we've got two signals that are down, but the 200 moving average is between the Bollinger Bands, so they would both show up. And it's still between the Bollinger Bands, so would that one. But I'm going to scroll back a little bit. I happened to find an area I thought was a good example. So I plotted this out ahead of time. So I'm going to go and bring up the indicator, and we'll find the SQ section. And way down here, it says confirm with MA1 above below Bollinger's. Now up here, you could select MA1 period. In this case, you can choose from all kinds of different moving averages. Okay, a little different when we're using moving averages with the BR and the ZR. Those are restricted to exponential moving averages. But it just so happens with the SQ signal, you can choose many, many different types. And you can see we've got the 600 exponential and the 200 exponential. So the MA1 is the 200. That's what we're going to kind of demonstrate here. So we're going to confirm with this MA1 above below. We're going to set that to true and hit apply. We'll close that. And that's why I put these ellipses. Before, we had signals in all of these areas where the ellipses were. But notice that the Bollinger Bands are both below the 200 here, so that signal qualified. And the Bollinger Band, again, both below. So the upper and the lower Bollinger Band below the 200, we got that signal. So now we're going to scroll through the chart a little bit, see what effect that had. See, now the Bollinger Band has the 200 between it. So we're in between, so we would get signals going both ways. We didn't get any down here because the price didn't come down. Okay, now here's a signal going up. 200 moving average is between the Bollinger Bands. Yep, that's correct. Again, we're 200s between the Bollinger Bands. We got that SQ signal, but this also just kind of gives you an idea what these signals look like. And this is one of three signals. We've taken off the trending signals completely. In this case, 200 moving average between the Bollinger Bands, but they just all happen to be coming down. We never made it down to the lower Bollinger Band. So when you get into really range-bound areas, you're going to see the back and forth action. And a little bit of that here. In this case, the Bollinger Bands are both above, so we just got this one SQ. Did not get anything here or here or here or here. So that kept us out of the counter trend signals in that case. In this case, you'd think it was acting as a trending filter. No, not really. This is just a nature of the squeeze. Sometimes you'll see these prices where we're in a little bit of an uptrend, it pulls back, and some of these squeeze signals will be the beginning of a very large move. And that's why I say just put this on your chart and scroll back, and there it is again. Just a very short squeeze, came down. Every moving average, even the 600 was between the Bollinger Bands. But Huge move up. Maybe you could argue that the price touching the 600 moving average had something to do with that big move. Now that's why I'm spending a little more time with this particular signal, because it does have a lot more filtering options. Notice, gee, would have loved to have had a squeeze signal there. That was a nice big move. Well, both Bollinger Bands were above the 200. It's the only one we're using right now. So no signal. So that's, and the scrolling back really kind of gives you an idea of how this thing works. So here's a little more range bound area. 200s between the Bollinger Band. We're getting both long and short. So, okay, folks, I think that's enough for this one. Yeah, that gives you a little bit of an idea on this SQ. It's probably, there's more things going on with this SQ signal than the other two signals, so this is a little longer video. I appreciate you bearing with me. And again, I hope you got something out of that. Have a great evening or day whenever you're watching this, and I will see you on the next video.